Does Netflix's vast library of content, its reliance on unscripted shows, and an international pipeline insulate it from the pressures that plagues its rivals, Guy?
Certainly feels that way, and they're getting the valuation on top of it. But the valuation, I think, is justified. Listen, at its trough, when it was trading 185, 190 or so, the valuation was less than a market multiple. We all talked about how cheap it was. Now at 30 times, it's getting more in line with where it's traded historically. But you probably still have, I don't know, 25% EPS growth on a stock that continues to grind higher in earnings. I'm interested in what Chris has to say, but this current level, this 450 level-ish that we're trading at, pretty much a 50% retracement of the all-time high we saw in the fall of 21 and that trough level that I just talked about. So this is a logical place for it to pause, but I still think it grinds higher from here.
Well, I mean, there's no question that the trend of the stock is up. But remember, it was a year ago, I think last April, where you broke down from this 500, 450 zone. There's a massive gap on this chart here. We're up about 180% off the lows. We're right into that 50% retracement you talk about. You've only been this overbought on the weekly RSI a handful of times in the stock's life. I think if you're going to look for a logical place to take chips off or pause or consolidate, this is it. We're going into earnings 30% above the 200-day moving average here as well. I think that's risky into a tricky seasonal period where you start to lose the support of the calendar here.
Yeah.
You know, I thought of something very ironic. Who's writing the picket signs for the writers that are on strike? Huh?
So clever.
Right? So I agree with Chris. I think this is a great spot where I think it's a little bit overdone here. You've had enough of this built in where password sharing or not sharing. Mm-hmm. You've had a run-up. You've had the king of content. It used to be Disney was the king of content. Now Netflix is the king of content. For me, I think this is hugely overextended. I would take it off the table.
The question, too, is, how long do you continue to give Netflix this sort of premium above the others? Or is this sort of a, we see the strike, Netflix is going to be the winner, and so you afford Netflix that premium, and that ends there? Or is there continual sort of, the more time goes on, the more likely that somebody might churn off of another subscription and churn on to Netflix, and Netflix isn't an actual beneficiary to that degree?
I think all of that is true, and I think that, ad-supported and password sharing are not over, I think, right? I think there's still room to go there. And I think, as you said, the strike benefits them. Also, going into the strike, they had a gigantic lead of subscribers. But more importantly, they had a balance sheet that can withstand and can grow. And so they're in a very different position. All that having been said, I can't buy it here. I'm long. I'm really stuck. I would consider selling upside calls. I've done that once before and had to buy them back higher. So it's hard for me to get around the multiple.
You believe in the story.
I do believe in the story, but it doesn't mean
in the multiple.
I don't believe that's happened in other stocks, Apple as well. It's a premium company.
But if you can't buy it here, shouldn't you not be long it? You've explained that to me.
I know, and it's hypocritical of me, but I do think they will win. But one other thing that I think could happen: consolidation in the industry. I do think they'll be a beneficiary of that.
This really underscores the divide between Netflix and the others in terms of the pressures. We were just talking about Disney the other day, the immense pressure that it feels across all of its business, but particularly DTC when they're trying to cut costs. This is not the time.